We're going to pull back the curtain on a financial world that is, well, it's all around us, but at the same time, it's pretty much invisible. We're talking about a market so ridiculously huge it trades more money in a single day than most countries produce in an entire year. Yeah, let's get into it.
Okay, so think about the last time you went on an international trip. You remember that moment, right? Standing at the currency exchange booth at the airport, swapping your dollars or euros for a wallet full of, something totally new. It just feels like a normal part of getting ready for vacation, doesn't it?
Well, guess what? In that one simple transaction, you became a player in the single largest financial market on the entire planet. You actually made a trade, and what you're trading on is the foreign exchange market, or as pretty much everyone calls it, Forex.
To really wrap your head around what we're dealing with here, we have to talk about scale. And I'm not kidding, the numbers we're about to look at are genuinely mind-bending. So let's start with something we all know, the New York Stock Exchange. It's a titan of finance, right? A name everyone's heard of. Every single day, on average, about $20 billion worth of stock changes hands there. That's a huge number.
Now, hold on to your hat. Compare that to the Forex market. It trades, on average, $9.6 trillion every single day. That isn't just a little bigger. That's a completely different financial universe.
So, to put it another way, if the New York Stock Exchange is this big, scary monster, a real powerhouse, then the Forex market is a literal behemoth that makes it look tiny. It's not even a fair fight.
So what is this thing exactly? Well, at its core, it's the global marketplace where all the world's currencies are traded against each other. But here's the key. It's decentralized. There's no single building, no one exchange. It's just this massive electronic network that connects banks, brokers, and traders all across the globe, 24 hours a day. You know, the market as we know it today is actually pretty new. It all kicked off after World War II with an agreement called Bretton Woods, which basically pegged all these global currencies to the US dollar at a fixed rate. But in 1971, that whole system got thrown out the window. By 1973, major currencies were allowed to float, meaning their values were suddenly determined purely by supply and demand. And just like that, the modern Forex market was born.
Okay, so who on earth is moving these trillions of dollars around every day? Who are the real players in this gigantic global game?
Well, this is the big leagues. This market is completely dominated by the largest international banks. We're talking names like JP Morgan, UBS, Deutsche Bank. These guys aren't just participating. For all intents and purposes, they are the market, handling absolutely massive volumes of currency for their clients and for their own accounts.
And here's the thing. Not everyone gets the same deal. There's a hierarchy. At the very top, you've got the interbank market. This is where the big banks trade directly with each other, getting the best possible prices. That's more than half of all transactions right there. Then, a step down, you have smaller banks and big companies. And finally, at the bottom, you have retail traders. That's people like us, who get access through brokers.
Okay, so now we know who is trading. Let's look at what is being traded. This brings us to the actual currencies that make the world go round. One currency just completely dominates this whole space, the US dollar. It is, without a doubt, the king. Now, here's a funny little quirk about how this stuff is counted. Because currencies are always traded in pairs, every single transaction is counted twice. It's why if you try to add up all these percentages, you'll get 200%. Just a little fun fact for you.
But let that sink in for a second. In almost 9 out of every 10 trades in this absolutely massive market, one side of that deal involves the US dollar. It has this unbelievable level of dominance because it's the world's primary reserve currency. It's what central banks and big institutions all over the world hold on to for international trade.
All right, let's tackle a very modern question. How does this old-school giant, the Forex market, stack up against the new kid on the block, the challenger everyone's talking about, cryptocurrency?
They are just completely different animals. You got Forex on one side, which is built around stable, regulated institutions like central banks. Its movements are relatively smooth. And then you have crypto, the Wild West, a totally decentralized network with insane price swings. That stability in Forex is what allows traders to use really high leverage, basically borrowing money to make bigger bets. If you tried that in the crypto world, well, good luck.
But here's where it gets really interesting. These two worlds, they aren't totally separate. New research is actually showing what they call a spillover effect. A huge, volatile shock in the crypto market can actually ripple out and cause turbulence in traditional currency markets. It just goes to show how connected everything is becoming.
So, We've seen the insane scale, we've met the players, we've done the comparisons, but let's bring it all back home. Why should you even care about this giant, invisible market?
The answer is pretty simple. It affects almost everything. The Forex market is basically the plumbing of the entire global economy. It's what allows a company here to buy parts from a supplier in another country. It directly influences the price of that imported car or that bottle of wine you've been eyeing. It makes global tourism possible. And, the value of a country's currency on this market, it's like a real-time report card on its economic health.
And that leaves us with a huge looming question. For half a century, this system of floating, bank-controlled currencies has been the absolute bedrock of global finance. But now, with decentralized digital currencies on the rise, are we watching the beginning of the first fundamental shift in how the world's money actually moves? The next decade could completely redefine everything we just talked about.